Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 18, 2015. This is Daily Chart of the SPY, and we had a pretty good update today. Not bad. From the 208 level, we had about 40 S&P points or 4 SPY points in basically 4 trading days. That's pretty darn good. Did we expect that? Not necessarily, but did we expect higher prices? You better believe it. So what do we have on the docket moving forward? So those of you that are long the S&P, I would suggest that you begin to tighten up your stops or consider taking some profit, because through let's say Friday through Monday, I believe that there's probably another short-term turn coming in the market. Now, what does that mean? What that means is the same thing it normally means. I don't think there's anything wrong. I don't think we're going to collapse down, but I do think that we're going to have one of these scenarios. So let's take a look. So from high to low, or from low to high, we have a pretty good move. Do I think that there's a little bit of higher prices to come? It's possible in the morning. We'll see how it plays out. But how much more, I'm not really sure. Maybe we get up to double top, which would bring us, let's go back here, it would bring us to about the 213.80, 213, maybe 214 level. At that point, I would suggest that we're probably going to have a short-term cycle hit, which will produce a pullback into next week. So let's go back to what is that going to look like? Well, the first order of business is, how far would you pull back? Well, the first thing I would say is, if I do a Fibonacci retracement, it's going to be pretty obvious where the pullback numbers would come. And I'm going to refine these numbers probably tonight and tomorrow, but I can't really refine them until I see a top put in. So right now, this is more generic because I don't know where the top is. So don't take these numbers as numbers. This is just a general area. If I had to say where would a pullback go, well, you're first going to probably be in the 212 neighborhood, then 211 neighborhood, and then 210, 210 and a half neighborhood, and maybe lower than that, but I don't think so. So those aren't numbers to go by yet because we don't have a pivot top. So there you have it. Until we have the pivot top, there's no way to calculate the retracement level that we might get to. But you can see it's pretty easy to figure out. You take the pivot low to the pivot top, and you're going to draw in 25%, 0.382%, 50%, 618. That's just the way it works. It just works over and over again. And, I obviously do a couple of other calculations, but when they all converge together, I know those numbers are good. The 208 number was good. Let's see what happens when the market makes a top, and we'll go from there. So if we go over to the E-mini, it's much of the same routine, waiting for the chart to come up. There you go. We went up into the 215 level today. We spiked through it, of course, and then we pulled back and challenged it again. But you can see what happened. That 215 was ultra important. And the next level to be aware of, and we may, don't say definite, but may see this tomorrow, is, let me get the calculation here. I did it earlier this morning. 21.21 to 21.23, in that ballpark. So that's going to be the next level of resistance, and figure it's about roughly 7-8 points higher than we finished today. That's not that much. Anything beyond that, I don't have it. In other words, I can't see it from here. So I'm going to have to see how the market reacts if we do get to that 21.21, 21.23 level tomorrow. And if we do, then I'll refine the numbers accordingly. But I just don't have higher price targets in the short run, okay? Now, let's just make sure we're all aware of what's going on here. All right, you still have grease on the table. I know it's nonsense, but it's still grease on the table. You have options expiration tomorrow. So at the end of the day, you're going to see a lot of gyrations in the market. There's rebalancing going on, and it's quadruple witching, which means 4 different asset classes are expiring tomorrow. So you almost have to expect the unexpected. So once we clear tomorrow, we'll have a better idea what's going on. But remember, if I have a cycle day hitting tomorrow, so that means that we could trade up in tomorrow and turn plus 1 day into Monday, or we can turn tomorrow morning and we can start down from there. There's really no way to tell until it begins. So once I see the pivot top in, and maybe this is the pivot top here, that's possible. If this is the pivot top, I'll have numbers on the downside. If it's not, I'll have numbers on the downside from wherever that becomes the pivot top. Does the market have to turn tomorrow? No, it doesn't have to turn tomorrow or Monday. But, you know, my cycles are right probably 75% of the time. So I'm going to go with that and say I'm looking for a turn in the market, but it will be short-term in nature, which means that it's probably a 2 to 4 day event on the outside. It may not even be that much. So hopefully that gives you a sense of where we are. Let's just look at a couple of other things. Look how strong the IWM was today. That's a huge up move. That's fantastic. Go over to the daily chart and you get just a better picture. I mean, look at this uptrend. You see how I had this trend line in here and we kept banging on this trend line, but we never even came close to closing on or below this trend line. And since that's the case, you know, the market was bullish in nature. So look where we are. We're basically at new highs. And what that tells you is very strong market. The fact that we closed above this day here, okay, which was 126.91, that's going to give you an all signal clear for the IWM, but that's not to say we can't come back and back test a little bit. But here's just a little market lesson. The fact that we closed above it is bullish, meaning the fact that the IWM closed above this day here is bullish, okay, and you closed above this here, that's bullish. That doesn't mean you can't come back and back test it, but that doesn't necessarily take the market out of the bullish position. So I'm looking for higher prices. You know that we've been looking for higher prices in the market for quite some time. Market's been choppy. Past couple of months have been tough to trade, but never wavered off, other than maybe one time I said we're running out of time. But guess what? The market caught up to time, and look what happened. We're moving higher, okay? This was always going to be, we don't need all those lines, or we don't need the daily. This was always going to be the bullish part of the year. The cycles were pointing to higher prices into the summer months. We'll worry about what happens when we top out. When we top out, we don't have to worry about it right now. Okay? So, VIX. Why not talk about the VIX? Look what happened to the VIX this week. The VIX got sucked all the way back down after you made a run at the 200 period moving average. But here's what happened. You have to understand that we went above the 200 period moving average, and the following day we closed below. We didn't close above this day here. And I would consider that a non-confirmation, or if we closed above, it would have been a confirmation. But the fact that we closed below, it was a non-confirmation. And look what happened next. So we'll see what happens tomorrow. There could be a little more upside in the market, but I would expect the VIX to probably bounce down in this $12, $12.50 area early next week. Gold. Let's talk about gold. Here's another area we were expecting a rally. It was struggling. It was giving us a tough time. We had our numbers. We had our line in the sand. 1174 was the line in the sand. Let's go to the hourly chart. It's easier to see with all these lines in here. Okay, there you go. 1174, market bounced off of it, and look what happened. 1185, okay, look what we did to 1185. We consolidated it below it yesterday. We tried it, failed, okay? And then all of a sudden, last night, we popped back up, and then we recaptured it, and look what we did. We went right to the 1197.50, and we stalled. We backed off, tried it again, pierced through it, came back to retest, and we're above it. And that's just the way the market works. You can see how these numbers are very, very accurate. Now, whether I'm off by $1 or 50 cents or $2 isn't really that relevant, right? It's in and around here. I expected the market to stall out, but then as long as we're above it, it's in a bullish position. So what happens from here? Can the market pull back, the gold market pull back? Of course it can. However, I've been telling you that I'm expecting higher prices in the gold market. I'm expecting gold to challenge the highs from before back to the daily chart. I'm expecting these highs to get tested. And look at this line here. This was a darker line, right? It was 1205.82. Okay? What was the high today? 1205.70. How do you like that? Okay? So you have to take these numbers as something of importance, because I'm putting them in long before we get to these numbers on the chart. I'm giving you the support and resistance numbers that should enable you to trade the market with a high level of accuracy and, oh, by the way, profitability. Okay? It's a good deal. All right? So I don't really have anything much more to say about the gold market other than we're in a bullish position right now. Okay, as long as we stay above 1197.50, and if we break below that, you're back to looking at 1185. But here we are. We're going to find some resistance here. We're going to find some resistance at the 200 and this level at 212 right here. But after that, we should challenge the double top. And that's just the way it is. Let's go to oil. Oil had a little bit of an update today, but we're still in the middle end of the range. I still think it's bullish. I still think there are higher prices coming in oil, but we'll have to see. I need the market to give me a pattern again to trade it one way or the other. We had this move here up to the almost the 61.40, I think that was, or 61.30, 61.38, and then we backed off, and then we made another run today. So the market, in my mind, is still in a bullish position, but I don't have enough definitive information putting the pieces of the puzzle together to say, you know, be long and it's okay. I would love to see the market put in another pattern telling me that it's going to move higher. So until that happens, I'm going to just leave. I'll tell you about the crude oil market, but I'm not involved in it right now. Bond market pulled back today. But that's okay. It's a healthy pullback. No big deal. What did we do? We pulled back into a retracement level, and we bounced off of it. This was a 618 retrace. So I would say that there's nothing wrong with the bond market. If the stock market pulls back and we have lower yields, okay, we'll see higher prices in the bond market. And there's nothing wrong with this bond market. It's doing and has done exactly everything it was supposed to do. Okay, I still think there are higher prices in the bond market. I think this was an A, B, C, and we just haven't had the C leg yet, but I think we've had the A and B. That's my opinion, my humble opinion. Okay, you know what? Let's talk about GDX real quick. I skipped over it when I talked about gold, but I know I've had several questions on GDX, and I want to give you the scenario. So we had the up move. We broke this lower trend line, and where did we come? We came right into this double bottom here. What I should have done was I should have put another line in, but I can't do it now. It's too late. That's just my error. I should have put it in. I saw it the whole time. I talked about it. I just never put the line in. So where's resistance? Well, the resistance today was at the 200 period moving average. Your next resistance is going to be at 19 and a quarter, then 1950. And 1950 is going to be a fair amount of resistance right now. But as long as the gold market moves up, you're going to have an uptrending GDX, and you should you should get up to this 200 period moving average and potentially higher, but it's going to grind higher. It's not going to happen all in one day. And if you're long this market, you have to have a stop in the money. You have to be trailing the stop. And at 1950, I'm taking some profit, and then you can let the rest run. And that's the way to play the GDX market. But there's nothing wrong with it. I think there's higher prices along with gold in GDX. Those of you that picked it off at this low here, good job. Nice trade. Okay. So let's see. So we did the stock market, we did gold, we did oil, we did GDX, we did the bonds. We're going to do the dollar. The dollar was down a little bit today. You can see what happened. We came down through this line. Look at this double bottom. We came down through the double bottom and it held for now. Okay. I don't think it's going to hold for long, but it held for now. And you know what's happening. I said this was a bearish pattern last night. Said there were lower prices coming. I'm surprised we didn't get down to the 200 period moving average, but that's because this double bottom held here, and that's normal market behavior. Nothing wrong with the downtrend in the dollar. I think there's lower prices coming, and once we get down to my number down here at this line, we're going to be buyers. But not a surprise, the dollar had a little bit of downward pressure today. Should we talk about some stocks? Let's talk about a couple of stocks. Let me go over to my other screen and let's see what we have. So we're in Sears Holdings. Let's talk about Sears. Shield is acting pretty well. You had a bottom here. We jumped in. We're riding it higher a little bit. We're in the money. And let me show you the hourly chart. The hourly chart is good. Okay, you had an up move. You consolidated for a while on the hourly chart after this up move for what? 1, 2, 3, 4, 5, 6, 7, and then you moved higher. Remember what I always say, 6 to 10 candles consolidating, whether it's for a move lower or a move higher, is normally a buy area, right? So we got the buy, and now we're doing it again. At least it appears that we're doing it again. So we had an up move. So 1, 2, 3, 4, 5, 6. So let's see what happens tomorrow over the first couple hours of the day. No guarantees, but there's certainly looks to be higher prices coming in Sears. From a longer term perspective, let me show you what I'm looking at. So we put in, this is, I always talk about the bottoming signals. Now, this wasn't on extremely high volume, but it was okay. Wasn't great. It was just okay. But then what we had was, we had an up move and then another up move. We failed, but then we had another up move and we closed the day. Watch this. The high here was 28.06. Today we closed at 28.15. That's a bullish signal. If the market was bearish, I would suggest we would have closed below yesterday's high, but we didn't. So I'm looking for higher prices. The next target I'm looking for is simply about $28.85 to $29, okay? And we'll see how the market reacts in and around that number or those numbers when and if it gets there. And if it's bullish and we consolidate further, then we look for the next step higher, which is up here in and around $30, okay? So that's just kind of the way it works. It's going to be a grind higher. You're going to see at some point some short covering in Sears, but if there's pressure on the market over the next few days, you're most likely going to see pressure in Sears as well. It'll normally trade with the market unless you get a short squeeze, but that's it's acting well, and we're happy with Sears. Solar Edge. Let's talk about Solar Edge. Here's a daily chart. I know I talked about this the other day, but that's okay. We had 3 days up. We're putting in a stall day here. There's chances are that we're probably going to just work off some of that, maybe down to the 50 period moving average. A retracement from this low to this high is not out of the question. Maybe a pierce through the 50-day, maybe challenge this low here at about 37.75, in that ballpark. but I think there's higher prices coming in solar edge. If you look at the daily chart, you can see that I think we're going to challenge these highs. I don't see any reason, as long as the market remains bullish, that we won't challenge these highs and hopefully get through them right around, let's say 41, 41 and a half. And how the market reacts up there will tell us how it's going to go going forward. Let's see if we can do one more. How about Delta? We'll talk about Delta. Nice little pop in Delta. You can see we had a low here on volume. This is the daily chart on volume. Then we consolidated sideways to lower, right? 1, 2, 3, 4, 5, 6, 7, and a move higher. What a shocker. Folks, it happens over and over again. You just have to look at the charts and see these things play out. You can see how they react. Now watch this. Here's a down move, and we had 1, 2, 3, 4, 5, 6, 7, 8 down. You know, it doesn't all have to be as clean as this. It just, markets move in, and I've always said this to you, and I don't know how many folks picked up on this over time, speaking of time, but time is more important than price. So sometimes we have to wait for the market in time to do what it's going to do. And I would expect Delta to get at least to the 20-period moving average and then challenge this high here from the 8th, which was 42.62. It doesn't have to get all the way up that high, but appears through the 20-period moving average, maybe to 42 and a quarter. That's certainly in the cards in my mind. Again, if we have a couple of days of pullback in the market, you might have to wait. But again, time is more important than price. Hopefully this is helpful, folks. I hope you guys are learning something. I hope you're making money. Let me know. I like to hear the news. Send me an email, david@mystrategicforecast.com. This is another episode of Common Sense Market Analysis. Thanks for being members, folks, and thanks for tuning in.